Hi, good afternoon everyone. My name is Ram Damija. Welcome to my channel. Today is 3rd of March and new series, new month and the last month of this financial year, and the market doesn't seem to stop. It's on its way down. Although I would comment that today was not so bad if you look at the context of where the markets actually stopped. It probably might not turn out to be that bad a day, and it was looking like we might have a waterfall today at one point in time, somewhere around 10 o'clock. It is looking the markets are not going to hold at all, and all the high beta names like alpha, momentum, small cap, etc., had started to break down completely. And this is after a huge fall of 30 odd percent that some of these indices have witnessed over the last 5 months, and they were down almost 2-3% today itself. So some of them like alpha, etc., went down to almost as 35% from the top. Now 35% from the top, I will show you, is a lot of fall, and typically these are the times when there are bottoms also made. So let us see how it goes, but the recovery has been good for intraday. There has been some movement which has been seen in the open interest also. So let's see if that particular thing holds. And apart from that, there was not too much in the markets that is happening, but I will take you through whatever is going to be relevant for us going ahead into this particular week, and whatever is going to impact the markets, I'm going to take you through to that. So I'll first of all start off with the put call ratio. Now if you look at the put call ratio, we are at 0.74 now. This has improved a bit. Okay, so in the morning this was around 0.66 odd, so it has improved a bit. And if you look at the difference between calls and puts, it is also not very high. It is about 18 crore calls versus about 13 crore puts, so there's a difference of only 5 crore contracts. So it's not very high. Sometimes this goes to around 10 crores also, but it is all right. But you can see huge amount of calls written at 22,500, 400, 300, and there is some support that is there at 22,000, and then below that. Now if you look at it in terms of what happened for the straddle premiums today, now this is how the Nifty straddle played out. We opened somewhere around the range of 260, and there has been a good decay, and we are closing the straddle at around 234. So that basically indicates that there was some amount of calmness in the market that has come, and that's why the premiums have gone down. Now let us look at the charts. Now this is what I'm talking about. This is the Nifty 3-minute chart over here. Now if you see, we opened somewhere around 22,200. We immediately, in some time, started to make this brutal fall, and this was a very big fall. This was big enough to take out all the puts in the system. But from there, the market kind of stabilized. It tried again to break, it did not, and from there the recovery came in. So this I would say is a very good recovery, though in the larger context of things, if you look at this is the 1-day chart, in the larger context of things, it is not much. So you can see this small candle getting made with a large wick with down, but it's not very significant. But still, I would take some positive out of it and say that fine, we did not crash today. And the way the market is, still there is what, about 30 minutes to go. The way market is a kind of able to come back, I think it's slightly heartening to see that. Now where is the next support? 21,800, and eventually at somewhere around 21,295. So these are the two supports, and the resistance we are going to find at 22,800, and then going ahead, there's no point talking about the other levels because they are very far away. So this is where we are in terms of the Nifty, but I would still take some heart of it. I'm not saying that it can't go down. As I had said earlier, when Nifty starts correcting, it falls 800,000 points immediately, which I told in my last video also. You can see this Nifty tried very hard for 10 days to balance over here, but once the buyers gave up, the sellers just became very dominant, and you can straight see a 800-point drop from here. So this is what happens. The market, when it goes up, is, as you can see over here, 3-4 days it will just cover up 1,000 points, right? And when the fall happens, it covers another 1,000 points. Rest of the time it will be in a range, or something, it won't move very highly on either side. So we are in that downturn. We'll have to see where that downturn stops, and once that downturn stops, we probably will form a small base and then shoot up, because the market has been going down continuously. As you can see over here, this is the 5th, 6th month of the correction from September peak that we had made, lower lows, lower highs. Clearly that pattern is making out. At some point in time it's going to break and go up, and that is going to be very, very vicious in terms of the rally. Now coming to where the indices were today, what has been, VIX is surprisingly gone down, and I think the reason for that also is the way markets have recovered. So that's a good sign. Apart from that, small caps have been the weakest link in this particular downfall. So they are down, and apart from that, PSC, metals, IT, MNC, autos, pharma, etc. are all up. Nifty is kind of flat today. Now I would like to draw your attention to something which I had shared earlier also, but this is the small cap chart. Now you can see what is the kind of fall that we have had from the top. So small cap index made a top of around 18,000 and we are at 13,740. So it's a brutal fall of 25 odd percent, and this is basically taken us back to December of 2023. So we are now in 2025. This level was last seen as 2023, and after that there was a secular up. So 1.5 years of gains are wiped out in this particular index, and these are the exact times when people, if they enter, they gain all this 1.5 years of earnings at this particular price. And I will show you some very interesting calculations that why one should look at entering into falls only. Now this is the mid cap chart. It is no different. You can see that the top was made somewhere around here, and 22,000 mid cap 150, and we are at somewhere around 17,700. This level was basically seen last in January of 2024. So again 1 year plus. So the indices are back to their 1 year back level, and they are available for that price. Now just let's look at this 52-week high where we are. So Nifty is down at 15.7%, whereas if you look at the mid cap, that's at 20%, and small cap is at 26% down. Not only that, the other indices like alpha is down 33% and momentum is down 30%. So these are huge cuts that you don't see very often, and these are the exact times, as I have said earlier, where one can selectively start looking at indices. And I will show you why. I have written something on Twitter on this thread. Now let me explain this. Now what this thread basically says is that deep corrections lead to well building opportunities, and if you do a SIP of in a particular index, or forget about SIP, even if you do even if you buy at a lower level at these particular dips, which is 15%, 20%, 25%, 30%, 35% dips, okay, you're going to get a huge advantage. And if let's say the CAGR over the next 10 years is 12%, which is true for the index, then if you buy at 15% dip, your CAGR will actually be 14.1%. If you buy at 20% dip, your CAGR will be 14.5%. If you buy at 35% dip and the index just goes up by 12%, which is its long-term average, your CAGR becomes almost 17%. And I had shown you how alpha, etc. are also down 35%. Small cap is down 25%. So even if let's say you buy today index which is 25% down and it compounds at 12%, your CAGR is going to be 15%. That's huge. What more does one need? I mean, even if you can get at 15% CAGR, that's huge. You get 5-6% in your fixed income and 12% in equities, 11% in gold. If you are able to get 15%, 17% kind of returns, it's huge. Of course, now one needs to understand what risks, etc. are there. But this is how investing works if you invest when the market is down. Now coming back to the markets for today, how the markets have done. This is the chart for Nifty 50. Reliance is down minus 2.3%. HDFC is down minus 1.8. Bharti was up plus 1. Bajaj Finserv minus 1.8. JSW plus 2.7. BEL was up 4.4. Now let us look at Nifty next. Jio Finance is down minus 3%. So all Reliance Group stocks are coming under pressure. VEDL plus 3.7. Siemens plus 4.6. ABB plus 3. Varun Beverages plus 4.5, United Spirits plus 1, Adani Green 3.5, LTM plus 3, TVS Motors plus 4.2. So a lot of names have seen some good recovery also today. This is the Nifty 500. So there were a lot of names which have gone up and gone down as well. And I think we have spoken about the major ones. But let's look at this particular chart. So REC is up 5%, Godrej Property is plus 3, PFC plus 4.5, Prestige is plus 5, and so on. So it was a mixed bag over there, some going up, some going down. Now let us look at the international cues, and then I will come to my 2 cents about the market. Now international cues are all fine, as I have said. Nasdaq closed in the green on Friday. Nasdaq futures are up 0.26. Bitcoin actually shot up. It had gone below 80,000, but there was a tweet by Mr. Trump that they're going to make a strategic reserve in which they are going to have 3-4 coins, and Bitcoin is also going to be one of those, of course, he said. So Bitcoin is at 92,000. It has shot up plus 7%, and all the other coins were up 20% last night. US dollar index is behaving all right at 107. Brent oil, which is the major contributor to our economy, so that's down at 72, which is good news for us. Currency is 87.3, and gold is finally cooling off a bit at 28.68, which is good news for all of us. Now, where do we go from here? Anyone's guess, frankly, because we have corrected a lot, and the reversal can come from any point in time. It can come from 15%, it can come from 18%, it can come from 20%. That's not the important point. The important point over here is that if you invest during these point in time when there are huge corrections, when the market tide turns, then you can actually make decent CAGR on your returns. So that is the whole thing. Staying invested, not getting very panicked, not putting your investments in stocks which have a questionable earnings, future, etc. But sticking to mutual funds, sticking to indices, sticking to, like, I'll take my example today. I bought quite heavily in names which I've already invested in. I'm talking about indices over here. So the way I approach investments is that I try to invest mostly through mutual funds and ETFs, etc. And whenever the market is down by 20-30% in whichever index, I try to add to it. Of course, I keep on adding every month as well. But whenever I see a big correction, like for example, Alpha was down minus 35% from the top, I added quite a good quantity of that. I added some very good mutual funds which invest lots in large caps, because they are down 15-18% from the top. And I have added a lot of momentum names over the momentum indices over the last few days. So this is a good opportunity, for, according to me, to buy, and that's what I am doing. And that is what I advise my clients also, to have a proper structure around your investments. Don't just randomly buy anything. Have a proper structure around your investments. See what your risk tolerance are. See how much the history of a particular mutual fund or a particular index is. What is the kind of standard deviation those indices, mutual funds, etc. have? How much have they fallen in the past? Whether you'll be able to take that kind of risk tolerance when they fall that much that they have fallen in the past. If the answer to all of that is yes, then you have a structure around your investments and you should invest. And as I have said before, I help people structure their investments. So if anyone is interested, please fill the Google form below. I will get in touch with you and I will help you make a nice mutual fund portfolio. A lot of people say that why should I go via the regular route? Why should I not go via the direct route? The point is that the market movement itself every day is 2%. And if you're bothered about that 0.6% between a direct and a regular fund, if there is someone to advise you and handhold you, then that 0.6% doesn't really matter. It's going to get covered within no time. So that will be my advice to people, whoever, even if they have a mutual fund portfolio and they want advice how to restructure it, or they want to know that what else can they do, whether they can start a new investment, they can contact me through that Google form. And because corrections are not supposed to be wasted, that is what I have learned over the past few corrections. And it takes some conviction to buy during these falls, but those conviction can only come in if you have a proper system in place. So that's it from me now. A very normal day in the markets. Thankfully, I will be ending in green today. That is because I had cut my call positions when the puts went off and the market was absolutely at the bottommost level, because I was not seeing a very good risk reward in holding the calls, and the markets actually recovered from there. So a green day, slight green day for me, which is okay. February was very good. It was one of the best months of trading for the year. So let's see how March goes, and thankfully because of that there is cash generation that has happened which can be deployed back into the market. So let's see how March goes, and I shall keep you updated, and I shall see you tomorrow with another update. And thank you for watching. If you like my content, please subscribe to the channel. Please leave your comments. I like to read your comments. I also try to reply to as many as possible. And that's it. Have a nice day. Thank you. Take care. Bye bye.